at some point in 2021, we actually had $1 trillion settled across all the futures exchanges back then, compared to $800 billion for the spot exchanges at that time. So it shows again that usually, and of course for any asset classes, the futures market is much larger than the spot for various reasons, especially for commodities, where nobody wants to have basically that load of commodities being transferred back to them. And that's why they would prefer cash settled futures in that specific case. So the institutionalizations of market structure is a very interesting. October has been an incredible month for the long tail of crypto assets. Actually, when you were looking at the performance besides Bitcoin and Ethereum, we're going to explain some of the key developments that we've seen in the market. And then last but not least, we're going to walk you guys through what we should be expecting for November and how can we actually predict ahead of time the potential outliers going forward, and what are the major events and developments that we should be expecting for the rest of Q4. All right, without further ado, let's get started. So Carlos, I know you want to start the show, so I'm going to hand it over to you. Tell us more about what happened this past month, and most importantly, who were the outliers in this month?
Perfect. So it was a very positive month for crypto assets. As you can see in the chart here, we had about 9 outliers, which had a more than 15% performance month over month. And the exceptional thing here is that if you notice to the right in the chart, the traditional assets, such as bonds and stocks, struggled a lot during October as they were under pressure due to some instability on the bond market and some uncertainty by the Fed and their decision. Whereas you can see that crypto assets really had an outstanding performance. And today we'll dive deeper into the 3 best performing assets, which were Solana, Chainlink, and Stacks, as well as Bitcoin and Ethereum, which are obviously the 2 biggest assets in crypto, representing over 50% of the entire market cap. So if we go to the next slide, we see that Solana had an 80% performance during October. If you recall, Solana was one of the coins that struggled the most due to FTX collapse exactly a year ago. And it was really ridiculed by many critics due to chain issues. The blockchain had many outages early in its life cycle due to its novel technology. It had an affiliation or a connotation with FTX and Alameda. And then after the FTX collapse, it had a lot of forced selling. So right now, from a technical perspective, we are observing a massive mean reversion with SOL catching up to relative gains. As you can see on the chart here, while Solana has performed more than 200% year to date and 80% in October, it's still really just catching up to what it was worth relative to Bitcoin and Ether before the FTX collapse. So you can see that the SOL BTC chart, which measures SOL against BTC, it's still below where it was when FTX collapsed, whereas SOL has now reclaimed what it was worth in terms of Ether before Ethereum collapsed. And now if we go to the next chart, what we can see here, first of all, let me just say that Solana has retained a loyal developer community, and it's the biggest ecosystem outside of Ethereum with almost 1,000 monthly active developers, showcasing that it has a very vibrant ecosystem. However, if we use some relative valuation metrics, such as market cap to TVL, we see that Solana right now is overvalued by this metric relative to its peers. TVL is a crypto-native metric that is very similar to assets under management. So it measures the amount of assets that are locked in DeFi applications on top of a smart contract platform or a scaling solution such as Arbitrum or Optimism. What we can see here is that relative to the amount of assets under management that are on Solana, the market cap is quite high. So the market cap of Solana is about 30 times higher than the amount of assets under management on the platform. Whereas we can see that the top 8 other smart contract platforms have multiples that are a lot lower. And what that tells us is that maybe Solana is overvalued by this metric, but we need to take into account other factors as well, such as the market may be pricing higher growth in the future for Solana. Adrian, do you have any opinions on this?
No, absolutely. I think you summed it up perfectly. Obviously, there's a very bullish momentum behind Solana with a lot of good strategic partnerships with Visa and Shopify. Also, we had Solana Breakpoint conference last week with some nice announcement like Fire Dancer, which is basically an additional client for validators, which will improve like the network's stability. Then some news around fast deployment on AWS. So there's some good news and a bullish momentum, but absolutely, if we dive a bit deeper and look at metrics like that, we could consider Solana to be trading above its value.
Yeah, at least relative to peers, because this is a relative valuation metric. But again, we need to take into account the limitations of these types of relative valuation metrics and understand that it just measures one aspect of the entirety of the ecosystem.
Yeah, I couldn't agree more. I would add to that and expand on what you just said, which is we need to also consider, for example, the growth prospects of several metrics that we're looking into for Solana and over smart contract platforms, such as, for example, the growth of the number of users interacting with the asset class, the new entrants into the Solana ecosystem, the number of new protocols and applications building on top of the Solana platform. And I think that would basically give a broader and more comprehensive picture about whether we're seeing that the fundamentals are moving along in the right direction. Great. Next up, Chainlink. What happened with Chainlink?
So Chainlink has been getting a lot of institutional traction, specifically for tokenization, due to the release of their cross-chain interoperability protocol. So what is a cross-chain interoperability protocol, or CCIP? Is just basically an innovative way of communicating between different blockchains. And what Chainlink has been focusing on quite recently is in allowing institutions, and mainly in the traditional spectrum, to leverage CCIP for tokenization across different blockchains. To give you a few examples, a few months ago, Swift, the interbank messaging platform, conducted a year-long experiment using CCIP to showcase how banks like BNY Mellon or Citi can use this protocol to transact with tokenized assets across various public and private blockchains. Another example is ANC Bank, one of the leading institutions in Australia, leveraged CCIP to test that delivery versus payment settlement using this across different blockchains. And most recently, Vodafone used this not in the financial aspect, but also in the global finance trade. So it's tokenized crucial trade documents using CCIP. And so we can see that there's a lot of institutional adoption on this front. And why is this positive for Chainlink? Because the protocol charges a small fee on top of every transaction that takes place in the protocol. We can see in the chart here that despite being launched a few months ago, it has already accrued over $100,000 in revenue from CCIP. And this will only continue to grow as the protocol integrates more networks. You can see to the right of the chart that it already has 7 networks supported by CCIP. And as more institutions see the value of tokenizing assets across different blockchains, CCIP can see a lot of growth that is undoubtedly positive for the Chainlink ecosystem.
This is a great leapfrog to what we are expecting and what we have been expecting for the past 18 months, which is the convergence between traditional finance and digital assets, and most importantly here, blockchain technology. Interoperability, not just within the ecosystem, but also outside traditional systems, is also very important for having basically blockchain technology becoming the backend infrastructure for various use cases. And here in that case, for asset transfers, asset tokenization, and most importantly, over use cases that are going to be world changing going forward. And actually, speaking of use cases, we do have a magazine specifically on the emerging and top use cases that we see with blockchain technology. So check it out. And after this call, of course, you're going to receive all the links to the right resources that we have.
I think what I want to add here is just like a shout out to one of our researchers, Kareem, who has been foreseeing and believing in Chainlink's vision for a while. And it's quite nice to see it actually come to fruition. So
Absolutely.
Yeah, absolutely. He called it for sure. Okay, next up we have Stacks.
So Stacks outperformance, which achieved a 31% month-over-month performance, was driven by two factors. The first is just that STX has behaved as a higher beta asset throughout 2023. So if you look at the chart here, it's showing Stacks beta coefficient using BTC as the benchmark. So what is the beta? The beta basically measures the risk in the form of volatility against the benchmark. So what this is telling us is that Stacks has a beta of 1.5 approximately against Bitcoin this year, meaning that on any given day, on average, if Bitcoin moves, let's say 10%, you would expect Stacks to move 15%. And this happens both to the upside and to the downside. So really what we're seeing is that Stacks, just from a trading perspective, it has been acting as a higher beta play on Bitcoin. And as Bitcoin has performed quite well, Stacks has performed even better in the past month. The second update is more on the mental side. As part of the upcoming Nakamoto release that will take place on the Stacks network, the network released what is called SBTC. SBTC is basically a way for users to transfer their Bitcoin holdings from the Bitcoin layer 1 to the Stacks layer 2 in a trust minimized manner. So what does this mean in practice? It means that if I have Bitcoin, let's say on my Bitcoin wallet, and it's sitting idle there, now I can transfer that Bitcoin via a smart contract to the Stacks layer 2 blockchain that's sitting on top of Bitcoin, and that enables smart contract functionality to deploy it on the DeFi applications of the Stacks network. And what that does in the future is that it has the potential to unlock the more than $600 billion that are just idle sitting on the Bitcoin blockchain. So this is really positive, and not just for Stacks, but for Bitcoin as well, because it has the potential to allow Bitcoin to be more than just a store of value asset and really allow it to become like more of a tech play.
So what you're saying here, in other words, especially for Stacks, the key takeaway is that the Stacks has become a leveraged Bitcoin, right? When we have that high beta of 1.5, if Bitcoin moves by 100%, Stacks will move by 150%. And I think these are the things that we're seeing today with Stacks. But the good thing is, as Carlos mentioned, is that Bitcoin is beyond just an emerging store of value. We're seeing more integrations with smart contracts, with NFTs. And speaking of which, actually, on Bitcoin today, there has been more than $18 million in NFT volume, which outpaced the total volume of NFTs traded on Ethereum. And it shows again that Bitcoin is really becoming now a technological play. And these numbers are basically the testament to that specific trade for Bitcoin going forward. And of course, Stacks is playing a significant role as well to provide more interconnectedness with everything that we're seeing on Ethereum today that could be compatible with Ethereum, with Bitcoin as well going forward.
I think it's massive, no? As Carlos mentioned, it's really unleashing like the 600 or 650 billion worth of Bitcoin in circulation. And it's really a boost for the utility of Bitcoin itself. So you can really start using your Bitcoin as collateral to take out a loan. You can use it for different DeFi activities. So that's definitely quite massive. I think that's especially for next year where people should have a close look at, because I believe we will see a lot of innovation coming from that space.
And these are also obviously the early innings. And I would say where Bitcoin is where Ethereum was back in 2000. So we're seeing basically the first experiments and iterations of what we could do with Bitcoin compatible smart contracts. Because as Adrian mentioned, the sky is just a limit. And then we could see anything beyond that. That could be, I would say, going above and beyond our imagination, which is why what we've seen with the internet back in the early 90s, it was impossible to figure out that we could have companies like Uber and Airbnb coming out. And I think it's because we have so many moving blocks and pieces of the puzzles within the internet infrastructure that enable the innovation happening on top of the application layer. So what we're seeing today is that an improvement of the Bitcoin infrastructure that was not possible over the past 14 years. And now we're seeing more and more innovation on the back end of that. Great. Moving on. Speaking of which, Bitcoin. All right, Adrian, is it you?
Yeah, absolutely. Why not? Obviously, Bitcoin has been performing extremely strong as well the entire year, actually, but obviously over the last 4 weeks, I would say. If we just look at the Bitcoin dominance, as we can see here at the chart, it's basically at levels we haven't seen since April 2021, basically the start of the bull market, the last bull market. And the reason for that is we just see a clear flight to quality. Obviously, not just in crypto, but in the broader context of the market. But while equities had some rough days here and there, Bitcoin actually decoupled and saw a lot of inflows. And that's just a testament that more and more people really see it as that kind of hedge against counterparty risk, against global or the geopolitical tension, against currency debasement, and so on and so forth.
I think that the next chart really shows what Adrian just mentioned. This is the 30-day rolling correlation between BTC and other asset classes. So you can see at the beginning of the year, the 30-day rolling correlation between Bitcoin and equities was around 0.60. And at the end of October, it decreased to around 0.20. And for gold and for US treasuries, the correlation is now negative. So what you can see here is that Bitcoin has its own value drivers and that it can act as an effective portfolio diversifier. And for me, the key takeaway is really just highlighting again what Adrian just said, which is that what's unique about this specific point in time compared to previous bear markets is that Bitcoin dominance is going up. But usually when that happened before, it was still underperforming relative to traditional asset classes. Whereas now the Bitcoin dominance is going up, but Bitcoin is actually performing quite well compared to traditional assets such as stocks and bonds. So that's why we are saying that we're seeing a flight to quality, not just within the context of crypto, but also in the context of global markets.
Yeah, absolutely. And I would say for asset allocators looking into where Bitcoin fits against other asset classes, of course, it fits under alternatives with precious metals, with commodities, art, etc. However, it's also very important to understand that this is also a nimble technology, right? This is also a software as well. And we're seeing that it could also, to some extent, fall under, for example, equities, if we're thinking about tech growth strategies, because of the fact that this technology is moving forward very fast, it's fast-paced, and we're seeing more and more, I would say, similarities with software as a service technologies, especially when it comes to smart contracts. So that's something to keep in mind. But I would say the overarching categorization for Bitcoin is under alternatives for the sake of simplicity. But it's very important to understand that from a valuation perspective and to understand the total opportunity, it's very important to also consider the fact that this is a technology at the heart.
Definitely evolving asset. But it's just nice to see also that the narrative, because last year, obviously, the correlation between Bitcoin equities has been quite high. We've heard this a lot from clients and just from the general market. But historically speaking, Bitcoin has been quite decorrelated. And that's what we're seeing right now as well.
Yeah, absolutely. For the second largest crypto assets in the world, which is Ethereum, Adrian, tell us more. Why Ethereum has, to some extent, underperformed, especially when we're looking at the ETH to BTC, so the Ethereum to Bitcoin ratio. We've seen that Bitcoin has been the first leg of this crypto spring, moving from the bear market to now seeing more, I would say, brand awareness of the asset class, thanks to, of course, tokenization, which, of course, tokenization happens mainly on Ethereum. But tell us more why we haven't seen that development, or I would say that fundamental to pricing ratio back to healthy levels as we're seeing today with Bitcoin.
As you mentioned, if we look at the Bitcoin to ETH performance, we basically see a decline since the Shanghai upgrade. We've been trending down in ETH terms. But I would say it's several reasons, but the main reason is definitely narrative. So obviously the narrative this year has primarily been centered around Bitcoin. Obviously a lot what's going on with institutional adoption, traditional financial products for BTC, the upcoming halving. So just in terms of narrative, it's really been focused on Bitcoin. And that's why kind of Ethereum is in that shadow and has been left behind. But again, and that's what we are showing here on the slide, which we call the gap. We always have to keep in mind that there's a difference between the fundamental development, the intrinsic value. So what is being built on top of it, what kind of cash flows are generated. While on the right side, we obviously have the price, which are way more driven by market sentiment, by momentum, and obviously hype and narrative. And just looking at Ethereum, as Eli mentioned, there's still a lot going on. I think one of the biggest use cases and emerging trends is tokenization. And a quick reminder here, we recently released our State of Tokenization report. So make sure to check that out. And there's a lot going on from real estate, stable coins, private equity, but also, and that's what we want to show here, our US Treasuries. And US Treasuries are interesting because obviously investments in DeFi became less attractive because you can get like a very high yield in traditional markets, basically risk-free. But what we see here is basically the tokenization of those US Treasuries. So DeFi made or took advantage of those high yields. And we can see here different protocols that basically tokenized US Treasuries. And just looking at the trend from January, we clearly see an uptrend and a demand for those tokenized assets. And we already reached over 650 million, which is still small, but it clearly shows that there is a trend.
And we definitely do not want to provide too much details to the audience and then not having them reading our state of tokenization. So check it out. And of course, after this call, you're going to receive all the resources, the reports, as well as the articles that we published over the past few months, which of course includes our state of tokenization. Moving on. So what are we expecting for November? Let's talk first about valuation, especially for relative valuation. So looking at the monthly performance. So we've seen that October has been or was an incredible month, especially this year. And one of the things that we should be expecting is that on average over the past 12 years, when we look at 2010 to 2022, the average performance for Bitcoin was around 40%. And the reason why it was around 40% is because we are skewed towards the early days of Bitcoin, where we've seen, for example, from 2011, when we had the first Bitcoin exchange being traded and having basically coin trading pairs, having an incredible uptick in price, especially like up to 2013, when Bitcoin basically went from a few cents to essentially $1,000 at that time. So of course, that average is really skewed towards the early days of Bitcoin. And as we know, past performance is not indicative of future results. However, we should be expecting probably a ballpark positive performance and returns for Bitcoin moving on to November. But again, it depends again on several I would say, elephants in the room that we should be having in mind, especially, for example, some of the allegations that we've seen against Binance. This is still yet to be proven true or proven wrong. So we still don't know from the Department of Justice. So this is still an elephant in the room to consider here. But I would love to pick up your brain, guys, on what we should be expecting else in November, especially when it comes to the asset class and, of course, the underlying technology that may impact the market sentiment.
Absolutely. For me, I'm paying close attention to the derivatives market. In terms of open interest, we're sitting at about $15 billion across centralized exchanges for all cryptos. And that figure, to put it into perspective, is similar to what we saw in May last year before the Luna and Terra collapse. So for me, what we're seeing here is an uptick in the risk sentiment of investors. We're seeing increased interest from investors. And I think that risk capital is slowly coming back onto the table after it had a clear flight to safety over the past year or so. I don't know, Adrian, what you're seeing mainly on the market.
And I want to expand on what you just said on the futures market, which basically means that the market is pricing in a higher price moving on to the next few months for Bitcoin, specifically in that case. However, on the back of what you just said, we also see that Binance has lost significant market share over the past few months because of the fact that there are, of course, some allegations, but also on the back of the collapse of FTX last year, almost actually exactly a year ago, we've seen that the balance of Bitcoins and Ethereum and other digital assets on exchange has significantly decreased over time because people are looking for exchange-traded products as well as non-custodial solutions, for example, MetaMask wallets, or trading on decentralized exchanges like Uniswap and other exchanges available on several smart contract platforms like Ethereum. So interestingly, we're seeing that there is like some moving blocks into the market structure of crypto assets where it's becoming more and more institutionalized, especially because now the CME is about to outpace Binance as the #1 futures exchange for Bitcoin, which is essentially huge because we haven't seen that since the first Bitcoin futures were actually launched and traded back in 2017. So fast forward to 6 years later, we're seeing that the CME is about to become the largest futures Bitcoin exchange, which is massive for, of course, investor sentiment, but also investor confidence into the asset class. And it's very important to note that the futures market is the largest market structure in crypto. Usually the traded volume is much higher than the spot volume. At some point in 2021, we actually had $1 trillion settled across all the futures exchanges back then compared to $800 billion for the spot exchanges at that time. So it shows again that usually, and of course for any asset classes, the futures market is much larger than the spot for various reasons, especially for commodities, where nobody wants to have basically that load of commodities being transferred back to them. And that's why they would prefer cash settled futures in that specific case. So the institutionalizations of market structure is a very interesting, I would say, trend to keep in mind, because that brings more investor confidence and, of course, larger checks when they're looking at the most liquid exchanges to basically trade digital assets, whether in the spot or in the futures market.
I think because you mentioned what caught my attention, because you just mentioned that the balance on exchanges is decreasing significantly, especially post FTX. What's the news about Kraken considering building their own layer 2 on Ethereum, or more specifically on Polygon, which is quite interesting as well for many reasons. First of all, we know Kraken is usually more Bitcoin centric. So it's quite interesting that they're considering Ethereum and Polygon to build their layer 2. And then just in general, really this trend to more like a non-custodial way of saving assets, which first of all is also a hedge for them. If we look at Base, so Coinbase's layer 2, they were able to capture, I think, almost 10 million in revenue, which becomes more and more significant and an additional revenue driver for Coinbase itself. And like you use your existing user base that you have on your centralized exchange and transition them to a decentralized solution. And I think that's definitely a trend we should keep an eye on.
For sure. And it's interesting because you mentioned that they have this Bitcoin-centric philosophy at Kraken, historically, of course, and they're choosing basically the most battle-tested and the largest scaling solutions in order to basically provide over applications on the back of their ecosystem with the major exchange that we built over the past 10 years. And I think this is really interesting because it shows again that we're seeing innovation and integration of blockchain technology across multiple stakeholders in the space, not just from financial institutions like Franklin Templeton or from like the Monetary Authority of Singapore, but also within crypto today, many exchanges, including Coinbase. But I think the trend really got started with Binance by launching their Binance Smart Chain back a couple of years ago to really show that they can have an entire suite of ecosystems from custodial solutions to non-custodial solutions. And I think that's a really exciting move when we're looking at the use cases that we could see today with smart contracts.
And I think there's much more, no? There's so much we should keep an eye on. I think it's an exciting time. What I love to see was also the just stablecoin market cap. I've seen that on Tether was printing another billion in market cap, which obviously stablecoin supply is basically a proxy for the liquidity in DeFi. And it shows that people are flocking back in on chain and potentially move their assets into crypto assets directly. So that's one of the indicators I'm taking a close look at.
What about that trade that we've seen for one of the crypto punks, like over the past 72 hours? Like someone bought $1.5 million worth of the one crypto punk. Do we think that NFTs are back on track now?
I don't know. I just think it speaks for crypto punks. I think crypto punks really, they've been through multiple cycles now. For me, they really established themselves as the crypto art. So it's not a testament for the entire NFT industry, in my opinion, but definitely a testament for CryptoPunks itself. I don't know, what's your opinion?
But I would see it as a leading indicator. The fact that people are now deploying capital into NFTs, even if it's just CryptoPunks, which is the OG of NFTs, the best, like the highest store of value there is in the NFT ecosystem. I think it's a leading indicator of people taking more risk in this market, and that can potentially translate to other parts of the ecosystem that are more long tail. but we'll see. Absolutely.
No, I think you're right. I think, in my opinion, NFTs will potentially have their hype again, but it's really a more, for me, late cycle phenomenon. I don't know, Eli, what do you think?
For sure, but I think it would depend again on, number one, the brand awareness of that collection, and number two, then I would say the liquidity for basically finding buyers and sellers. That would be super important too. We've seen that OpenSea has lost significant market share compared to a couple of years ago against Blur. So I think at the market structure segment, we would need to see more and more, I would say, market making support for these kind of NFTs. And I think it comes along with the brand awareness. For example, in France, there are a few collections of CryptoPunks that are actually available in one of the museums, one of the most important museums that we have in Paris, called the Museum of Pompidou. And Pompidou used to be one of our French presidents back in the 1970s. So I think it's very interesting to see that brand awareness. But I would say that NFTs are not just, I would say, JPEGs or art, but there is much more than that. And I think what is more interesting with NFTs is just the technology underneath it, which is the token standard that enables the proof of ownership across any other internet connected devices. That's really the most important thing here, which is I cannot replicate what you have because I have the proof of ownership thanks to cryptography, that I own my identity, that I own a specific piece of the internet, and no one can steal from me because of the fact that I have my PIN code, because of the fact that I have my password. Unless you share with anyone else, no one can steal it from you. And I think that would unlock more and more interesting use cases on the back of that. And I think relatable JPEGs was just like the pet.com moment for NFTs, but there will be more.
You're 100% right. We always praise the underlying technology when we talk about NFTs and that it's applicable to so many use cases. But for some reason, it still has the stigma. And I have to blame myself as well. Once we start talking about NFTs, you get that association to overpriced JPEGs, which hopefully we get over that in the next couple of years.
Yeah, for sure. Absolutely. And that's why we're super excited to share our new State of Crypto magazine on the use cases that people can understand exactly what we're talking about more specifically. So check it out. And of course, after this webinar, you're going to receive all of our webinars and all of our articles and reports that will help you to understand exactly what we are explaining here on this call, alongside, of course, our amazing slide deck prepared by Carlos and Adrian. So I know we're conscious of time. I'm going to leave the audience for questions, comments, in the chat. So let's see if we have any questions from the audience, and then trying to respond to some of your comments.
Or let us know what you keep an eye on, what kind of indicators you are looking at, if you got anything interesting.
Absolutely. Otherwise, it means that we were able to respond to all the questions directly to the audience to understand what happened in October and what we're expecting in November. But if you have any questions, feedback, concerns, feel free to reach out to us directly at research@21shares.com. Check out our research on our website as well, 21shares.com/insights. Oh, we do have one. Ciao, guys. Are you gonna launch new ETPs in the next few weeks? It was great to meet you at ECE in Barcelona. Fantastic. Thank you so much, Andrea. Are we going to launch new ETPs in the next weeks? So nothing has been publicly announced. So if you have not seen any public announcements from 21 Shares, stay tuned for that. But we're always working on innovative ETPs. We're always looking at new markets and assessing, of course, the customer demand for our exchange traded products. Of course, if you guys have any ideas or thoughts, we'll be very happy to really listen to them, organize a call, and making sure that your demand is met. But there is a strict process that we're going through, of course, before launching exchange traded products. That's such a great question. And it was lovely to meet you, Andrea, as well.
And also just in general, if you want to have a one-on-one conversation with us, don't hesitate to reach out. We're happy to jump on a call to answer any questions or help you with anything you want to tackle.
Of course. Carlos, Adrian, I think that's a wrap. Thank you so much for your time. Thank you so much for the stellar presentation. For the audience, we hope that you enjoy the call and stay tuned for receiving our reports and all the resources that we have. And also, don't hesitate to leave your feedback and comments after this call in the survey. All right. Wish you guys a wonderful afternoon or a wonderful morning, wherever you're based, and speak to you guys soon.
Thank you. Bye-bye.
Bye-bye.